Kondisi pasar saham Indonesia terus saja terlihat redup. Walau MSCI sudah memberikan keputusan, Indonesia tetap di emerging market, pasar masih saja terlihat lesu. Investor asing pun terus melakukan aksi jual. Apakah karena Rupiah atau BI yang agresif menaikkan suku bunganya beberapa minggu terakhir? Portofolio seperti apa yang bisa investor susun dalam kondisi sekarang ini? Berikut ini analisis dan tips dari Yong Shim, Managing Director PT Samuel Tumbuh Bersama.
So the Bank of Indonesia is running under a dual mandate. Number one is price stability, and number two is FX stability. Now, inflation is currently running at about 3.4%, so it is within the guidelines of the BI's expectation of 2.5% plus or minus 1 percentage points. So it is all good. The real problem is that they want to stabilize the weakening of the Rupiah against the US dollar. So in order to stabilize the Rupiah, I think BI's best option is to raise interest rates to make Rupiah a little bit more attractive. Now, over the past 2 decades, we have observed 5 rate hike cycles, and we believe that 2018 rate hike cycle most resembles the current situation right now. During that time, the Federal Reserve was raising interest rates, which led to the weakening of the Rupiah, and foreign outflow was quite severe. So I believe that we are in a very similar situation. Back then also, inflation was not a very big issue. So if we put everything together, the JCI trend was in a range bound. It was simply boring. So we do believe that BI's attempt to stabilize the Rupiah at the sacrifice of growth is likely to materialize in the second half of this year. And as I mentioned, emerging market without growth is going to be pretty challenging, investment thesis for foreign investors, because I think Indonesian equity market is going to be less attractive. Let me give you an example of free lunch program. The free lunch program's original legislative budget was 335 trillion rupiah, if I'm correct. However, 4 months down the line, it was reduced to 268, now was cut down to 228 trillion rupiah. I personally believe that free lunch program is a beautiful program. I think the government needs to support, kids and pregnant women to fulfill their nutritious needs. I think that's a beautiful program. However, the problem is that I believe the preparation stage was very mishandled. After being legislated, after 4 months, the budget started getting cut, and then the finance minister said that it could be cut even further. I think that's a very classic example of mispreparation. And I think that's what's concerning the investors. It's not about the program itself, but how the internal communication, and also, most importantly, the checks and balances. Is the checks and balances mechanism still really working in Indonesia? I think that is the core concern of the policy setting in Indonesia. So as of 2025, Indonesia's budget deficit to GDP came in at minus 2.9%. And in the 2026 budget, the government is expecting the budget deficit to GDP to come in at about 2.68%. However, there is a clear difference between what you want to do and what you can do, right? In the first quarter of 2026, budget deficit to GDP came in at minus 0.93%, which I think is quite alarming. So of course, the government has promised that they will maintain the minus 3% budget deficit to GDP threshold intact. So having said that, we do believe that the government, of course, needs to maintain that threshold, but also at the same time, I think they need to have a very good planning of the budget spending as well as budget revenue, government's revenue, in order to maintain that. However, if we want to actually get more confident about the government's statement of keeping the budget deficit in control, I think they have to prove to the market that they are really serious about maintaining that limitations. So I think the structural weakness of the Rupiah is driven by two parts, I believe. One is the GDP gap, whether it's narrowing between Indonesia and US or widening, and also whether interest rate gap is narrowing or widening. Over the past multiple years and even decades, I think Indonesia's GDP gap has narrowed quite significantly. If we compare it from 2011 all the way to 2025, the GDP gap between US and Indonesia was 10.6 percentage points back in 2011, which is now 2.2 percentage points as of 2025. I think going forward, because Indonesia is not a big part of that AI boom, we believe that there is strong growth potential for US and the other developed markets, whereas Indonesia, I think, might struggle unless that infrastructure situation improves. On the interest rate side, the interest rate gap, 10-year government bond yield gap, stood at 9.2 percentage points back in 2005, which is currently now at 1.9 percentage points as of 2025. I personally believe that Indonesia's inflation is structurally too low. Even just comparing it to the US inflation is higher than Indonesia, which I don't think that many people will actually believe that the headline numbers. So at the end of the day, with very low inflation backdrop, the yield can also be maintained at a very low level, which actually does now bode well for FX rates, because at the end of the day, low yield in Indonesia and more attractive yields in the US compared to the risk-free capabilities, I think the structurally weakening Rupiah is likely to be maintained. There are several solutions actually to improve the situation. Number one is for Indonesians to maximize their growth potential. And I think the most important part here is to improve the Indonesia's inferior infrastructure situation. I think Indonesia's infrastructure situation is too weak to accommodate Indonesia's high growth potential. Secondly, I think Indonesia's yield situation has to also normalize. Of course, the BI has moved ahead of the US in terms of raising interest rates. And if the high yield environment were to be structurally maintained, I think it will place positive implications on the FX rates of Indonesia. So MSCI, I think, is kicking the can down the road. Ever since their announcement in January 2026, they have been always, kicking the can down the road. It's the next one. It's the next one. Now it's up for review in the November review. And honestly speaking, I think MSCI issue is already baked in the cake. All the active managers and also most of the retail investors, they have already, made adjustments to their portfolio, either by reducing their portion or maybe the DCA kind of style of investing. I think they've already factored that already. So I don't believe that MSCI issue is going to be a big part of the direction of the JCI. However, there is one key concern that is still left behind, which is the potential downgrade of Indonesia's status from emerging market to frontier market. However, according to Polymarket, only 27% chance is allocated to the downgrade of Indonesia's status to frontier market in the November index review. So I believe that MSCI issue should be maybe less of a priority when investors make their investment decisions. So S&P, I think in the eyes of the S&P, they're going to solely focus their attention on the budget deficit to GDP, in my personal view. because at the end of the day, that is the most critical factor that the Fitch and also Moody's, the reason why Fitch and Moody's downgraded the Indonesia's rating outlook, right? I think because Indonesian government has already announced publicly that they are going to still maintain the minus 3% debt to GDP threshold, I do believe I would like to give the government the benefit of doubt and that they are going to maintain minus 3% debt to GDP, budget deficit to GDP ratio. So I think it needs to be clearly seen. Maybe S&P might downgrade the ratings outlook. However, rating outlook is not equal to the rating itself, downgrade of the outlook rating itself. So I believe that would not be a key concern also at this imminent time. So for now, we are overweight on cash, market weight on fixed income, gold and crypto, and underweight on equities. I think the best offense is defense at this kind of market of times of uncertainties. There are too many negatives, investment negatives, that's hanging over the market right now. And I think the best strategy to take right now is a defensive mode. I've discussed about JOMO, the opposite of FOMO, right? FOMO represents fear of missing out. JOMO represents joy of missing out. During times of uncertainty, if you want some peace of mind, I think being less exposed to the stock market or risky asset, I think is a better strategy to take. And that is the reason why having a diversified portfolio of assets is very important. And I recommend clients to reach out to SAMO representatives to consult their portfolios. So we are market weight on gold and crypto. Of course, in gold, you can't actually buy physical gold. Buy physical gold and stash it, hidden somewhere at your home. I think that's very cumbersome. So we recommend investors to actually look for paper gold, so to speak, because we don't have a traditional instrument that provides that kind of investment opportunity. We have crypto-based gold assets that crypto securities that track the movement of gold, which is called ticker code PAXG. We can provide that kind of investment opportunity through our SAMO Securitas Indonesia, SAMO Crypto Indonesia. So I think that would be a good option for investors to construct their investment portfolio 5% gold through SAMO Crypto Indonesia. So we assign a neutral weight of 5% for gold, 10% for gold and 5% for cryptocurrency, which for cryptocurrency, the 5% recommendation was recommended by BlackRock, I think early last year. So hence, we also incorporate that 5% asset allocation to crypto into the general recommendation to our investors.
Keputusan bisnis terbaik datang dari data, bukan tebakan. Mudah berlangganan Business Insight dengan subscribe with Google. Download aplikasi Kontan sekarang di App Store atau Play Store.